Okay, recording this video after close of trade Friday the 4th of February 2011. I want to do something a little bit different in this video. I want to talk about exits, and the reason for this is something that came out of the survey that I've been running over the last few days was that people are asking for a more systematic kind of approach rather than the kind of heavy discretionary kind of feel that I have to my videos, and certainly have some rules in my head, and I think I need to be a little bit better about kind of getting them down on paper, if you like, and this is a way of kind of documenting them. The topic is exits, and I want to talk about that because I got a very good email from Ron yesterday. I'll just read you the email quickly. So, hi Barry, need to ask if you have any insights into the psychology, especially the fear of trading the E-mini. Have studied my trades and noticed the following behaviors. 1. When the trade goes my way, I tend to bring my stop into break-even, fear of turning into losing trade. Often I get stopped out, only to watch the trade produce 2 to 3 points if I'd stayed in. So that's first kind of point to do with kind of moving stops to break even. Second one, I tend to take profits early in the first leg of my trade. I notice in your videos you get your 4 points by allowing the trade to pull back, then reach your targets. That is nerve-wracking for me. Again, I believe fear of turning the trade into a loser. And then thirdly, my stop is at 1 to 1.5 points, thinking that if the trend goes that far, it is not doing what I thought, and I need to get out. There have been times that I've been glad, but often I get stopped out only to see the trade move into winning territory. Ron. And I think this kind of stop at 1 to 1.5 points is probably pretty common, and I suppose I've got some particular views on profit targets and stops and how to manage your trade, and they tend to be quite simple, I suppose. I think you can get quite complicated. My rules are fairly simple, but they're a little bit unorthodox. So let me just talk about, first of all, the first one, which is my magic 4-point target, and just brought up a 1500 tip bar chart of the last couple of days' trades. This is Friday's trade, Thursday's trade, this is the close of Thursday, this is the open on Friday. This huge volatility that we had was around the employment numbers that kind of came out, and I've just marked on here some kind of trend moves. So we've got a downtrend move, an up leg, a second up leg after consolidation, a down leg starting off in the pre-open, and then another down leg and a final up leg here. And the point I want to make is that most of the trend legs in the E-mini move in 8 to 10 point ranges. So if you like, this is 1301 up here, this is about 1291, so it's about a 10-point leg. We reverse that leg with another 10-point move, go through his consolidation phase, and then finish off with an 8-point leg, which starts off at 98 and ends up at 1306. In the pre-open we kind of started out at 1308 and came down to 1300, so an 8-point leg here, another 8-point leg here from 06 to 98, and then a 10-point leg at the end of the day. Now, not to say that every day is full of 8 and 10-point legs, but just over the years watching the E-mini, trading it, you kind of get a feel for the legs being about 8 to 10 points. Now, given that I'm never going to enter at the low or the high, there's always going to be some chop and volatility before I'll take a signal. That chop and volatility usually is about 2 points. And then at the end of a move, the exhaustion move in a trend move happens again with a little bit of chop, as a top or a bottom is kind of found. And again, that kind of chop at the top and the bottom is about 2 points. So if you like, if you're looking at about a minimum 8-point move, you're talking about 2 points of chop at the beginning of the move and 2 points of chop at the end of the move. What you're left with in the middle is 4 solid points of trend, and that's what I'm trying to capture, and that's why my stop, my profit target is set at 4 points. And so for me, that 4-point number is a real magic number. Now, there's one instance when I'll use a 2-point. Early on in the day, when I look for my first kind of trade, I call this an icebreaker trade. I'm just looking for a couple of points because we tend to have quite volatile markets at the beginning of the day, and so just getting 2 points in the bag is really nice psychologically. You kind of settle down, you feel as if you've made a little bit, and then you can sit back and watch for a good setup. So 2 points early on when there's a little bit of chop in the market, but then when you're trying to catch a run or a little bit of a trend move, 4 points is a good kind of target. Now for me, one of the best kind of, so given that's a profit target, that'll go in automatically. I enter at market and I have a linked orders that go in straight away, one with my profit target at 4 points and one with my stop loss at 4 points, and those are linked orders. One cancels all, so as soon as the profit target is hit, the stop is cancelled and vice versa. So it happens automatically. I hit a short key, bang, it's all done for me. Now I do have to kind of manage that trade, but given that I'm trying to shoot for 4 points, sometimes I can exit a little bit better. And let me show you one of these kind of what I'm calling a pro signal. And again, last couple of days with kind of normal indicators on. The two important indicators to watch here are, first of all, the better momentum with exhaustion signals, exhaustion buying and selling signals, and on the price bars themselves, the professional bars. And again, this is on a 1500 tip bar chart where I'm kind of looking primarily. This is my primary trading time frame, 1500 tip bar charts. So I'm looking for my setups on that chart. I'm using the 500 tip bar just to finesse the trade, and the 4500 tip bar chart to get a better sense of trend. This was kind of a short trade here, and you can see it started to break down below this kind of low for the day, and we entered into a really kind of swift move to the downside, and it's a classic kind of signal here. The best exit is when we get an exhaustion signal lining up or very close to a professional bar. So we see the professionals have been shorting into this move, and this is kind of a data release that came out on the Thursday. The market quickly takes off to the downside, and the next time you see professionals active in the market is down here at 94 at exhaustion selling. The professionals also come in at 92 a little bit later, and then the market starts to rally from there. But the point is here, this is an extreme point that's been reached. As soon as I see a blue professional bar come up on the 1500 tip bar chart with an exhaustion signal, buying on the upside, selling on the downside, that's when I like to kind of hit the market and just get out at that point. Usually it's around my 4 point target, but if I've made a poor entry, if I've entered kind of late, that's a good place to kind of get out. If I've entered well, my 4 points will be around that region anyway, so that kind of works out well. And the reason why I'd exit here rather than waiting for the full move to be over at 92, and this trade essentially going kind of almost 9 points if you look at 1301 down to 1292 or 1291, 10 points kind of down here top to bottom. The reason I don't hold in down here is this little up leg here. We'll often have, once we see the professionals kind of come in and that exhaustion signal, we'll have a little bit of a flip, a little bit of retracement against the trend, and that's when the psychology kind of starts to hit, and you start to think, oh, should I just dump out now, get out of this trade, exit, I've got some in my hands, bird in the hand is worth two in the bush, all that kind of stuff. My preferred exit is exiting on this swift move down and using this signal straight away, rather than sitting through this little bit of volatility and hoping to catch an extra 2 points on this move. The better momentum signal on exhaustion signals will signal as soon as that bar has closed. So that's kind of good news, and the professional, so there's no delay in terms of the signals, if you like, here. So as soon as I see that exhaustion kind of pattern and the professionals, I'm out. And let me just show you over the last couple of days a couple of these kind of signals. So on that down move, that was kind of a good exit point here. I actually played this yesterday. I'd bought way too early back here in consolidation. I kind of bought this long trade here. It did go a little bit further right into the close, but again, looking, blue professional bars kind of come in here, and there's our exhaustion buying signal here, and that's that little flip down. You can see a little bit of a retracement. That move top to bottom here can easily be a pointer and a point and a half, and if I'm looking at kind of a 4 points being my profit target for the day, a point and a point and a half is a big move, so I don't want to sit on that. I'd rather get taken out on this swift move up on my profit target, and then if I can finesse the exit a little bit with a professional bar and exhaustion signal, that's kind of great. Same thing today. I wasn't short, early in the day today after this kind of volatility of the employment numbers kind of coming out. But let's assume, the professionals were selling into this up move here, bearish divergence and so on. We kind of sold off into the from the open. The first time we see an exhaustion selling signal plus a blue professional bar kind of comes in, great little place to take profits. Again, look at the retracement move. This was almost a 2-point retracement move here. Then we kind of came back. Finally, the professionals kind of come in at this second move and catch it, and that's kind of an important point for the day. It wasn't the low for the day. We kind of rallied from there, but it was the low of this move. Now again, am I going to sit through 2 points of pain here in order to get another, point maybe? If I can exit right at the extreme here? No. I'd rather get out on this move kind of down here with the professional bar and the exhaustion signal. Again, this move down here, and this is a trade I did take today, short here, and when we kind of moved into the professional bar and exhaustion selling and so on, great place to exit. Again, here's this little flip up. The professional bars on the downside, they don't get taken out on the highs here, so we're still kind of in a downtrend here. But this move here with the exhaustion signal, yes, this moves again a counter trend move of 2.5 points in the other direction. The final low is kind of down here, and the professionals kind of come in again. But again, why am I sitting through this much pain in order to make this little amount of extra profit on the move? So again, this pro signal where you see professional activity and exhaustion pattern together is really helpful for a great little kind of exit signal on a runner, a little bit of a trend move. Now, just to talk briefly about stop losses, the reason why I have a stop loss and Ron's kind of point of having 1 to 1.5 points. When you read the literature and what people are saying in the market, the risk that you can trade, if you're trading well, you should be able to trade with a tight stop of 1 to 1.5 points, and from that you can calculate all kinds of metrics about the leverage that you should be using in order to with your account size and so on. And all of this looks very rosy, and everybody's kind of saying that's all the risk that you need to take. In my experience, that's just a recipe for disaster. That stop is going to get hit so often. First of all, certainly my exits are not that good. I tend to be early anyway, and I'm going to sit through 2 points of pain on a trade in order for it to see going my way. And I do sit through a lot more than that. Sometimes I hate it when it goes kind of 3 points against me, but if I've got the trend direction right, it will come back, and certainly a point and a half is nothing to go against you, assuming you've kind of exited, entered imperfectly, and you've got the trend direction right. So I really believe that's kind of a problem. And if you can't deal with the 4 points, it's like you should be scaling back the number of contracts that you trade. Trade the minimum number of contracts so that taking a 4-point loss does not psychologically kind of hurt you for the day, and kind of seriously affect your account size as well. Then let me talk about a couple of points Ron has about break-even stops and trailing stops. And the first one is just talking about break-even stops. Let's assume that you'd entered, for example, kind of down here. This was actually an entry that I took today. It was an icebreaker trade, which is I'm looking for the first blue professional bar of the day, and then the break of the high of the low. This was not actually, I don't like the blue professional bars right on the open. They're either, that was just way too close to the open, so I didn't use that as a signal. But this was a signal, and we actually started to sell off pretty hard into here. And you can see amateurs kind of leading the move down here, so I thought it was pretty suspect. And then we saw the first blue professional bar kind of comes in. So I actually took the break of the high of that bar as an icebreaker trade, just looking for a couple of points on the upside. But my entry was okay. This was obviously a better entry, but who knows that that's kind of going to go your way. All of a sudden this trade starts to go my way, and I'm like thinking, well, better move